all a happy Eid. On this day of Eid, let's hope and pray that this pandemic situation is erased and rejuvenated with the warmth and beauty of yesteryears. Stay at home, stay safe. Once again, wish you all Eid Mubarak. Hello friends, today we will discuss about the accounting branches and its comparison. Accounting is how your business records, organizes, and understands its financial information. Accounting is the process whereby information about a company is communicated to its interested parties. It is indeed the language of business. It conveys the financial portion of the business and helps to translate the working of a firm into tangible reports that can be compared. In simple terms, accounting is the process of systematically recording, measuring, and communicating information about financial transactions. Different branches of accounting came into existence, keeping in view various types of accounting information needed by different class of people, like owners or the investors, management, suppliers, creditors, various government agencies, etc. There are three main branches of accounting, namely financial accounting, cost accounting, and managerial accounting. Financial accounting is based on a systematic method of recording transactions of any business according to the accounting principle. On the other hand, cost accounting deals with evaluating the cost of a product or service offered. It calculates cost by considering all factors that contribute to the production of the output, both manufacturing and administrative factors. The third branch of accounting, or the management accounting, provides information to the management for better administration of the business. It helps in making important decisions and controlling of various activities of the business. Now, let's compare financial accounting with cost accounting. The main purpose of financial accounting is to calculate the profit or loss of a business during a period and to provide an accurate picture of the financial position of the business as on a particular date, whereas cost accounting aims to help the management in fixing the price and controlling the cost. It also pinpoints any wastages, leakages, and defects during manufacturing and marketing process. Financial accounting deals with all commercial transactions and the maintenance of the books of accounts with a view to ascertain the profitability and financial status of the business. Financial accounting deals with historical data. Cost accounting deals with transactions relating to manufacturing and sale of products and services. It deals with only actual costs and figures. Cost accounting uses both historical and predetermined costs that includes standard costs, estimates, etc. Financial accounting is presented according to the concepts, principles, standards, and in compliance with various acts and statutes. It uses financial statements, journals, ledgers, and trial balances for presentation. On the other hand, cost accounting is presented as per acts and statutes, which is mandatory to certain organizations. It uses tools to help improve the efficiency of business operations. These include cost of sales, product margin, and selling price of the products. In case of financial accounting, financial statements are prepared at the end of the year. In other words, financial accounts provide financial information once a year. Cost accounting furnishes cost data at frequent intervals, that is daily, weekly, monthly, quarterly, half-yearly, or on annual basis. The users of the information provided by financial accounting are both internal and external users. It includes the owners and the investors, management, creditors and suppliers, lenders, government, customers, employees, and the general public. Financial accounting presents the business performance. Cost accounting is used by the management to improve business process efficiency, and therefore the internal stakeholders like management of the organization are its users. Cost accounting also benefits the creditors and investors as they feel secured if there is business prosperity. Financial accounting is mandatory for all corporate entities. Every organization has to keep some record of its financial transactions. Cost accounting is mandatory for only certain firms fulfilling the criteria. We will be discussing about the cost accounting standards, the applicability of cost records and cost audit in our upcoming videos, which can further enhance our conceptual clarity in the area of cost accounting. Financial accounts deals with business as a whole, so it provides us with profit or loss for the whole concern. Cost accounting discloses profit made on each product, process, job, or service. Financial accounting, there is no aspect of forecasting. It is simply a record of the financial portion of the firm. In cost accounting, forecasting is possible using some of the budgeting techniques. Next, we will move over to the main points of distinction between cost accounting and management accounting. Cost accounting refers to the recording, presentation, and analysis of costs. Management accounting, also known as managerial accounting, is defined as a process of providing financial information and resources to the managers in decision making. Management accounting is only used by the internal team of the organization. Cost accounting is oftentimes considered as a subject of management accounting. Such a close relationship exists between the two categories of accounting. Both are internal to the organization, both have the same objectives, like both assist management in its functions of planning, controlling, and decision making. Even though both have similarities, they differ in certain areas. Cost accounting is concerned with ascertainment, allocation, distribution, and accounting aspects of cost. Management accounting is mainly concerned with the impact and the effect aspects of cost. Cost accounting uses quantitative cost data that can be measured in monetary terms. Management accounting uses both quantitative and qualitative data. In simple, it also uses those data that cannot be measured in terms of money. The primary roles of cost accounting are the determination of cost and cost control. In other words, to provide an accurate analysis of the cost and to maintain costs to the lowest point with the most efficient operating conditions. Efficient and effective performance of a concern is the primary role of management accounting. Cost accounting prevents business from increasing cost beyond budget. Only cost accounting principles are used in it. Management accounting offers a big picture of how management should strategize. Principles of cost accounting and financial accounting are used in management accounting. Cost accounting provides future cost-related decisions based on the historical cost information. Cost accounting is not dependent on management accounting to be successfully implemented. Management accounting provides historical and predictive information for future decision making. Management accounting is dependent on both cost and financial accounting for successful implementation. As mentioned earlier, cost accounting reports are useful to the management as well as shareholders and creditors of a concern. Management accounting prepares reports exclusively meant for the management. Only cost accounting principles are used in this branch of accounting. Statutory audit of cost accounting is a requirement in big business houses. Principles of cost accounting and financial accounting are used in management accounting. Audit of management accounting has no statutory requirement. Next, we will see the major difference between financial accounting and management accounting. Financial accounting is concerned with preparation of periodic financial reports by using historical data of business enterprise. The basic purpose of this report is to provide useful and timely information about an entity's financial position and its operating results to owners, managers, investors, creditors, and government agencies. Financial position refers to the resources and obligations of a business at any given point of time, and operating results means net profit or net loss incurred by a business enterprise during a particular period of time. Management accounting system uses historical as well as estimated data to generate useful reports and information to be used by internal management for decision making. In simple, financial accounting is the branch that deals with the preparation and presentation of the reports called financial statements. The financial statements presents company's condition, results of operations, cash flows, and other information. Management accounting, on the other hand, is the application of professional knowledge and skills in the preparation of accounting information in such a way as to assist management in the formulation of policies and in the planning and controlling of the operation of the undertakings. One of the most distinctive features of financial accounting, especially when compared to managerial accounting, is the compliance with the accounting standards. I hope this video has brought an insight about the accounting branches and its comparison. Please share your comments. For more updates, please subscribe and press the bell icon. Thank you.